All right, so today, what we're gonna do is pretty much completely restart with our charts. I do like to, I'm probably gonna start doing that like probably once a month or once every 6 weeks. Just because I do like to see I like to have the notes tracked for, for reoccurring zooms. And so you guys could see either moves playing out or moves failing. So yes, let's see, go ahead and get started. So we know what our macro direction is. We know that as of now, we cannot necessarily justify any type of big bearish move from the overall picture. Why? Because of a structural range from high to low to retracement into a new low. However, when we're looking at this from an internal stance, we know, actually go to the 2 week, right? We do understand, right? When we're within a structural range, we do understand that there could be attempts for something to go lower or higher. And by that, I mean high into low into retracement. Our high of our retracement is solidified based on the breaking of this. It could have been here as well, but that would have been for the internal trend. So as of now, we know that this is, right, an attempted move towards the downside based on this previous turbulence point, right? Turbulence point, reaction confirmed, retracement. This was all I believe this was the COVID mess. Yes, it was the COVID mess. However, I'm kind of ignoring the wicks and kind of just seeing what this does in terms of direction. As an effect, right, we did see the attempt to come lower. We now have the internal retracement, high, low retracement. That, right, inevitably failed due to weekly POI here. Not necessarily the best move. However, this has now signified that we have confirmed a bullish sense. Probably do this in orange, right? A bullish sense with supporting bullish order flow, and this kind of removes us from the overall macro bias and focuses more on the internal bias. However, right, something to note, I don't know if it was a 3 month, I think it's on EU, but we are within a 3 month POI within EURUSD, and as of now we are technically bullish internally. And let me show you guys what I mean with that. So the people who saw last week's Zoom, you guys were shown Dominic's case as to why this should continue lower, and it was actually a very good explanation. If you guys did not see that, definitely stay tuned, where he was pretty much saying that we're coming down with momentum. We've already solidified the high, and we were technically continuing order flow, right, based on, right, a high into a low into retracement. And something to note that I didn't note at last week was, right, that we already had the structural disruption. We had it labeled, I believe, 2 weeks ago, but the last week I did not necessarily apply it. And as a result, we see that although from an internal sense, right, we can argue, right, the continuation, right, from low into high, which, is technically a continuation BOS into a retracement into a new structural high. I did say that if we were to meet any sort of bullish transition here, we could justify a bullish move. However, we never necessarily got that, and I covered that on Tuesday's Zoom. So something to note for your notes here today is, right, the validity of concepts. For example, is a structural range more valid than a structural disruption? Is an order flow continuation more valid than an order flow disruption? Yes, no, it obviously varies by you and how you use the concept itself. But in this sense, right, the structural ranges did not necessarily overtake the structural disruption, because this is a model that is, let me actually change this color, because this is a model that is signifying that we are not continuing higher, because like we said with the DXY overall bias, where we had an attempt in one direction and it failed, right, this here is another attempt towards the upside which failed, which means that I should have never been bullish to begin with. But the only thing that was conflicting that was obviously the bullish bias. But it's all good. As of now, right, we know where order flow is, we know where structure is, and we already know that we also have our liquidity has already been swept here into a new low. So you could even argue another structural disruption there. So what's cool to note here is we can now look at this from a swing perspective. We know internally, right, we did break highs and we created a continuation BOS into the upside, which was based on, right, our daily point of interest. Daily point of interest has now failed. This is now a sign of order flow disruption. So as soon as we see that, I now know that realistically, right, especially if we're looking at this from a premium discount view, right, realistically, I am looking for that continuation, right, in order to continue to the downside. Now, I am no longer bullish on this. The only way I will be bullish on this, go to 2R, is if, right, we convincingly take anywhere here out. Why? This is our point of reference, and if we break this out, then that is realistically now a bullish liquidity grab, which could convert the bias to the upside. So that has to be convincing, because for all we know, we could really just come into a POI here and immediately melt. So this has to be convincing. Right, and to be the most conservative, you could always argue, right, that if you take out the overall structural range that was created here, then, right, that would more than likely fully solidify the bias, because you're now looking at a liquidity grab and you're also looking at order flow disruption here. And you can also argue that this is now the move, but based on this POI, but I would now hesitate to that because of the model that would have been formed here. So yeah, as of now, I can only argue a bearish sense. And if we are looking at this from a structure POV, it does make a lot of sense as to why this should continue lower. Structural disruption after high was made, right? We have now a failed attempt, and we now have a pretty decent retracement. And if we do get, you know, a reaction set here and we create a new structural low, I don't see this giving us another big retracement. I see this giving us more of a lighter retracement, and then it really melts, just because we've already seen, right, the transition, order flow 1, order flow 2, and if you continuously make these deep retracements, then eventually they're going to fail, and that just shows that our overall swing bias may not necessarily be correct. So as of now, I can only assume a bearish sense, especially, let's see how this week is closing. It's closing a little iffy, but as of now, I can't necessarily justify any type of bullish scenario just because of what is happening from the internal sense. So bringing us to AU, right, let's go ahead and do this one as well. We already saw our macro bias here as well, right? As of now, you can argue that this is still bearish, just as DXY is still bullish in terms of the macro bias, only because of, you know, how we have taken out wrong one, only because of how we've taken structure, right, and we've given a reaction, and we haven't necessarily taken out the full internal structure. This would be more so your swing structural range. However, order flow is being shown from right here. Order flow is being shown, as we dig deeper, we've already taken out preliminary high, which was a continuation BOS, meaning our structural range is intact. However, right, this is pretty strong momentum, and if we're looking at this from here, it's taken 24 bars to give that impulsive move, whereas this retracement has taken about 37. So the momentum has slowly and gradually been, coming down. However, once we start to dive in here, what I do want to know, obviously I always like to know where these reactions have been shown. A reaction that stands out here is definitely here. This is the last time we swept liquidity to then continue lower, which is a sign of structural disruption. And we've already seen, I don't know if you guys remember this, we covered this back in June, where this continuation BOS, it only solidified the range, and that's why we saw the continuation lower. So once that liquidity was taken, now, right, this move has not been convincing, right, in comparison to the previous impulses. And by that, I'm pretty much just signifying that we did not necessarily create a brand new move. So when I'm seeing this now, especially from a character perspective, we're seeing very, very choppy movement, very, very choppy movement. And although we did see a move into the upside that was relatively choppy, right, this is essentially, right, a type of trap, a type of bearish trap where you see like a channel and kind of are seeing something like this being faked out. However, because we got the news move, this has really just changed the bias for me, especially if we're looking at this from, let's just give this 2 hour, if we're looking at this from like a major intraday stance. I am going to note, right, that we took out liquidity, and we have now confirmed a bullish liquidity grab, meaning this entire thing is showing us a model to potentially give us the continuation to the upside. So as of now, right, the invalidation is here. Let me actually do this a different color. Right, so I know where my invalidation is, and from the internal sense, right, I'm very bullish. Why? Because, for example, here we have another example where we see a failed reaction, right? We take out a low, and like I said, this was kind of that fake breakout, right? That false move, and this has now shown us, right, that we're taking out multiple directions, and we're giving the showing of hand here. So as of now, there is actually something forming internally, right? And this is what happened right here, where we are seeing, right, the internal liquidity grab there. You could even argue from here, but you're seeing this kind of start to stall out and potentially start giving us downside. However, if we do break this, then we are technically bearish here. So if we're looking for the continuation, you need the bullish transition. If not, it's extremely hard to justify. So as of now, I am technically bullish on this, just as I'm bearish on DXY, but I'm not all that certain if this is going to give us that deep retracement. It may really just give us, you know, a simple continuation here into the upside, where we've already created the new internal structural range, right? And we're seeing low momentum form. So who's to say we don't necessarily continue to the upside? But either way, the bias is still the same. We are technically still looking for that bullish that bullish continuation. EURUSD, this is probably the inverse of DXY. Right, so just with DXY, we know that internally this is overall bearish. However, the bearish move has already completed by taking, right, these significant, swing lows. We know that those have been taken. We also know that our 3-month POI has been hit. I don't think we reached the open. No, we did not. So I'm trying to see if there's actually any other sort of POI here that it hit. Yes, right here, perfect. We do see the inefficiency fill, and this is a lot more perfect. It does seem like this is what is actually happening here. So we understand that from the bias perspective, we are bearish, which is 100% understandable here. However, right, if we're looking at this, volume is starting to greatly diminish here. Not that that really matters too much in this time frame, but it does signify that we're slowing down. And when we're looking at this now from a weekly, we know that we are heavily bearish, and we have been heavily bearish pretty much most of this year, I believe. Yeah, pretty much all of this year, and probably since last May, almost a year, or almost over a year, I'm sorry. So we know that this is extremely bearish. However, from the internal sense, we can only assume that, which is, technically DXY, taking liquidity and then continuing higher. However, there is the potential structural disruption there. And as of now, right, we are technically retapping structure here. We are retapping structure there. And there is also potential POIs up here for future reference. So as of now, momentum still to the downside, even with these recent bullish moves. We are still bearish from the momentum, from the structural, from the order flow sense. So as we continue lower, right, like I said, I like to note these failed reactions, and we've already covered this before, but just a general overview here is, right, that we have a failed reaction. However, we have broken through, right, and we said that the big catalyst was going to be this reaction here, and I'm pretty sure I covered it on Tuesday. But just to give you guys a quick recap, I did say that, right, what was going to matter most is what happens here. Why? Because we have the big move to the downside, we break structure, we confirm our high, right? And as of now, from the internal sense, right, there is no confirmed reaction because we did not take out previous structure. So here we have liquidity, we take liquidity, relative equal highs, that was taken out. And if we even zoom in deeper, right, we have our relative equal highs, that was taken, that was swept, that confirmed a liquidity grab, and this is a confirmed reaction based on the liquidity grab model, and this continued lower. However, it did not take out structure, it did not take out the overall internal leg or the overall major leg here. So we did not necessarily confirm the reaction outside of maybe a scalp minor intraday. So due to that not breaking, right, now you see the order flow disruption, and that is what creates the catalyst for the bullish move, right? And I think I saw somebody catch this here, which is actually very nice, because that was due to, right, inefficiency order flow. That was taken, and that was actually a very good trade. So this, right, we see the big move that could have happened, but what matters more is why that happened, and that's due to the failed reaction here. This failed reaction is the cause, and this is the effect. This is what's generating this move, right? Because this failed reaction leads to order flow disruption, and just to show you what I mean with that, right, reaction, order flow disruption, conversion. So we saw this explosive move to the upside, right, and we are now seeing, right, the reaction of our swing structure. And what's unfortunate here is I cannot justify anything in the bullish sense right now. I can justify the bearish sense on DXY, but I cannot justify the bullish sense on EU. Why? Because we have taken out, we have tapped into, right, the previous structure that we mentioned, and we have confirmed our high, right, with structure break and with order flow. So as of now, I cannot justify any type of bullish sense. I can't. I don't see any relative POI that could function here outside of the potential inefficiency. This is the only thing that I see be a potential catalyst. However, because we've already taken a swing structure point out, if you get a bullish transition here, then it becomes very high probable. But if you do not get that, and we get another type of, where was it? If you get another sense of, I'm trying to see what pair this was where we didn't see that transition. It might have been AU. No, I don't recall. I believe it was, yeah, if we get another case, right, of this where we don't necessarily see any type of bullish transition, right, high into low, high into low, high into low, high into low, retracement into low, we don't necessarily see anything. And yes, you could play based on a continuation BOS, but the structure is still aligned. So as of now, that is really the only thing I see that can justify that bullish sense. But from the weekly, this one actually, I'm pretty sure looks a lot more bearish. Actually, no, this is actually still looking relatively bullish just due to the engulfing there. So let's see what happens next week. Maybe, who's to say we don't get, you know, a rejection Monday or Tuesday, and then that would bring us to the catalyst of Wednesday, Thursday, Friday being bullish. So yeah, as of now, I would say the internal sense is bearish, but I am more so confident in this being bearish just because of the model aspect. So whatever transition happens here is definitely going to be what gives us the catalyst for the next week or two. So yeah, that was a bit of a long one today. But do you guys have any questions? I'm very bullish on the higher time frame. Okay, I see what you're saying. Makes sense. It makes sense. Cool. And also, what's really cool about this is this is where you really want to realistically find an entry for a long-term position, if you're willing to hold that long. Why? Because as we say, you know, whenever liquidity is cleared, we do not necessarily know what would happen afterwards. We can judge internal order flow, internal structure to guide us into the nearest major liquidity point, but after the liquidity point is met, we do not necessarily know what can happen. So as of now, the liquidity point, the major liquidity point has been taken. This is like a 2017 low, and this in and of itself, right, is where we swept liquidity for years, and this generated a big move, whereas now we're taking this low out, and who's to say we don't generate a big move? And that's the only thing that can justify, for me, that structural range. Could I grab your view on GU? What do you see on GU? I'm not going to justify your scenarios. You tell me. I need you to show me more charts, bro. You're just showing me this. And it would be better if you could explain it as well. We have created. I want to be bearish from higher time frame, but internally we are bearish. Catalyst. Is it clear enough? I mean, I need you to explain your process here.
Can you hear me?
Yes, sir. Let me mute my mic. Go ahead.
So from the daily perspective, I want to be bearish, but we're internally bullish to obviously make the retracement. But I think we have had the 4-hour low solidified, but then this low didn't really go into creating a new high. And having the preliminary break that's shown on the screen now, and I'll quickly just see if I can annotate it. Should I share screen?
Yes, please. Hold on. There you go.
Okay. Oh. One second. I'm on my little my Mac, and I have to enable something.
Yeah, just go to your system preferences. I think it's privacy, and then it's screen sharing.
One second. It's not letting me change it. Is it working?
Yes, it is. What setting was that? Just for future reference.
This one here, you have to click like this lock.
Okay, security and accessibility.
It says system preferences and then security and privacy.
But which one did you click on the left side?
On the left side. I didn't really click on anyone.
Oh, okay. I guess you opened it from Zoom, right?
Yeah.
Okay.
From Zoom.
Okay. Perfect.
Okay. Now I have to find that meeting. Right. So from the daily, I'm kind of seeing the red structure as kind of my structural range. And then internally we're bullish from the blue. And I'd want to carry on to coming for here. But since we have created this, I'm kind of thinking it could be unwillingness. And now that we're in a premium for this whole leg and potentially in a POI here, having unwillingness here could be giving me signs of a bearish bias where I'd want to attack for this low for the long term. But then I'm kind of seeing it as this 30-minute POI that was created from news could be a potential area of continuation to the upside. And just because we have created this low here, that did solidify the range and finished a pullback for this 4-hour leg. I'm a bit confused on what bias I want to really be favoring, but right now I'm favoring like bearishness.
Okay, go to your H4. Because usually what I like to play is the immediate leg that we're currently in. Let's see, let me annotate. So we know you're bearish. We know you're bearish. However, the model is in play. Something I really don't like to see is when we fail to make that high. That kind of does lower the probability of this being a high probable bullish scenario. That's just something that I've noted. However, that does not necessarily mean that this is not in play. So especially with GBPs, from what I know, they like their deep retracements. So my argument right now would probably be to seeing that deeper retracement, because this is a turbulence point which created a high. So I would necessarily play the bullish and the bearish in this scenario. So now you can start to zoom in. So my bias would probably be based on that H4 move. And just based on that H4 move, can you just draw a line on the open? Or I mean, not on the open, on the inefficiency. Just draw a line there, just to see the reference. Okay, now we can zoom in. Now we can zoom in. So what I'm seeing, zoom in more, probably go to the 5. So yes, this is correct in terms of, or put it like here. This, put it in the middle. Okay. So I do see the internal legs, right? But I do see here that you see the model. So this would have been a justified bullish position to the upside. I don't necessarily see this continuing lower. Why? Because of model.
Okay, and obviously where the model is.
The model is there. So I'm not necessarily sure there was an entry here. Let's actually zoom in there. Go probably M1. Because it does look a little choppy. So how do you play that, right? We already have the solidified high here. Based on that being taken out, this creates a structural leg to the upside, meaning your invalidation would have been there for the bullish sense, but I don't necessarily see where you could have been, entering from a safe perspective. So although the bias would have been correct there, let's go to M2.
Oh, I don't have M2 on mine.
You don't have M2? Okay, let me. Yeah, that's fine. Because you do see that, but this would have been technically picking the low, just because at the time it was still bearish and there was no real liquidity grab. If you're arguing this to be the liquidity grab, it's a bit of a stretch. So the only way that I could have justified is once we see this being taken, then this would have been a structural range where any type of entry could have made sense, with the invalidation being the SL.
Alright, you would just want to just enter unbiased.
No, not necessarily unbiased, but I'm saying if there was an entry, it would have been based on this. That's why maybe M2 could have shown something. Like let me see if on M2 there was something there.
Okay. So I'll stop sharing just so that I don't have
Yeah. Is there a does anyone know if there's a command for this here? Toggle auto scale.
I know that on Windows you press like Control R or something, or Alt R.
No, that's reload. Shift R. Who knows? Anyways, M2. Yeah. See, there wouldn't have been anything that would have justified that for me. If you really wanted to stretch it, it would have been here. But this is solely trading based on the bias itself. But in my opinion, it's worth it, just because, like I said, we are justifying this based on right? Low being taken, high being taken, internal leg, high momentum, inefficiency, failed, and the internal sense, because we are looking more so at the bigger picture and we're looking for bigger trades. That would have been more so my view from a swing POV, and I'm willing to risk that if I'm looking at this much potential upside. So I'm not necessarily looking at I'm necessarily looking at, you know, if this risk is worth this reward, and it's definitely worth the reward, and as long as the risk is justified, then I don't see why not take it.
Yeah.
So yeah, I don't see this. I don't really see that holding up, to be honest.
It looks a bit corrective, so I'm not too concerned.
And it is Friday too, and we are going to see that this close is extremely bearish. Oh, it's not actually. Oh, it's not actually. This is looking semi-ich. You do see the reaction there. But that's only based on that. So that's why, like I said, I like to play based on the internal, not the overall. The overall is just to give me a bias, but I'm playing within this. So yeah.
I get that. Yeah, I see. All right, thank you.
For sure. Okay, does anybody have any more questions? That bearish momentum would have had me iffy. Yeah, I see what you're saying. I see what you're saying. It would have been hard to justify that scenario for sure. Yeah, you're talking about this right here. And what sucks is there's nothing to play off here. That's what's kind of annoying. The only thing you could realistically play off is that. That's the only thing. But where would your SL go is the question, you know, and that kind of makes it not necessarily appealing.
Hey, Fredo.
Yes, sir.
Fredo.
Yes.
I know you were asking about like the auto scale, whatever. If you click on the Y-axis, I think you can. It does something like that. Whenever it's out of auto scale. I don't know a key for it, but if you press.
Maybe if you double click it, I think.
When it's out of auto, you see how like it's still in auto. So if you were like to scale it up, like make it larger, whenever you double click it, it'll auto scale.
Okay. And then if I zoom in as well, it'll scale it based on that. Okay, that's cool. Appreciate it. Cool. But yeah, does anybody have any more questions? All good. Yeah, a bit of a longer explanation today, but let's definitely see how this plays out. Awesome. So yeah, you guys have a great weekend, and I will see y'all on Tuesday.